shift our focus to Mint Street, and there was plenty of action there. So optically, we got a new all-time low. That's how the headline went in the afternoon. Now, what do you think of all the weakness? Is it just the emerging market selling? What's leading to such weak levels now?
Well, the title of my 1-minute presentation is going to be Least of Our Worries, the rupee.
Okay.
The only reason why the rupee was selling off a little more than it sold off in the previous weeks is because there is that $26 billion of FCNR deposits that would flow out on through October and November. The biggest chunk of about 16 billion happens in these 2 weeks, this and maybe a little bit of the next. Once that is over, you're going to see the rupee back on even keel, maybe even going above 68, towards 67, 70 or thereabouts. Now, of course, the larger term depreciation story remains because it is a dollar strength story, and President-elect Trump has not even become president. That happens on Jan 20th. So there are many events that will take the rupee lower. But again, it is the least of our worries. If you looked at the comparable currencies, see, it's the dollar index. Dollar has become expensive. No matter what you buy it with, you have to pay more of Mexican pesos to buy a dollar. 13% more Mexican pesos, 8% more Brazilian reals to buy $1, 8.5% Turkish lira, 6% more Malaysian ringgit since November the 8th. You have to pay more of each of these currencies to buy the dollar. How much is the rupee, therefore? It's just 3.7% more that you have to pay since November the 8th. So quite clearly, we are, this is an emerging market currency fall. In that, we are outperformers. We are the last man standing, so to speak. I wouldn't worry about this.
Okay, well, let's take the conversation forward. We have joining in now is Jayesh Mehta, the Managing Director and Country Treasurer of Bank of America. Jayesh, great to have you on the show. Thanks so much for taking out the time. What did you think of the weakness? And as Lata is pointing out, once this FCNR deposit issue is out of the system, would you be expecting some stability to return?
Not really. I think this is nothing to do with the flows. I think on the FCNR, we are more or less covered. It's just the dollar strengthening, which is what the thing. And as we pointed out, if you look at from 8th November, every emerging market, because dollars has been strengthening, every emerging market has been hampered. And I would just add up a little bit more, since, media likes to flash all-time low and the last low, which was on August 2013. Now, if you compare from that point of time, 68, 82, at that point of time to now, we are almost flat, you can say. But if you compare all other Asian market currencies, right, we can say we are flat, whereas rest everything else has depreciated from August 2013. You look at Malaysian ringgit, which is almost like 33% down from August 2013. You look at Indonesian rupiah, you look at CNY, you look at Korean won, with developed economy kind of. All of them are down, and there is nothing we can do about it. So as long as the dollar strengthens, the weakness in the emerging market currency will continue. Definitely India has been an outperformer in that emerging market, unlike 2013, where we were the weakest player. Maybe this time we will be the strongest player. But that all depends on how dollar strengthening is happening. So maybe I would say the volatility would remain till you get clarity on US, maybe by mid-February 2017.
Jayesh, you also speak with a lot of foreign investors and domestic institutional investors. Was the rupee's, what I would call minor fall, at all instrumental in making the FIIs sell more?
Not really, but it is, as I said, right, they have been withdrawing from emerging market. And if you look at the debt markets in India, particularly government bonds, which was what was the foreigners holding, not more than 3.5%. So, that's really immaterial. So it's mostly the equity market we need to watch out, because the FPI in Indian markets is more in equities rather than fixed income. Fixed income, more or less, they have, they have whatever they had to reduce, they have kind of reduced it. So I don't see any more coming, selling by FPIs coming in fixed income. Maybe they will look for a timing where to re-enter. And as I said, it's not only the Fed rate hike, it's about the sentiment. I think it's about the US 10-year. where the sentiment is actually driving it higher. The sentiment today is looking at 3.5% for US yield next year. But that, as I said, that's fundamentally nothing's changed. Is the sentiment because of the new government there, which people will come to know only when he swears in January, and then as and when the new government thought process comes out. So maybe till Feb 15. We will be more trading on sentiments, and sentiments can go anyway.
Jayesh,
so very difficult to predict.
Jayesh, allow me to ask you a simple question. It's a very different world compared to 2013. That time you were running a high current account deficit. There was a lot of commentary on whether the RBI is, unnecessarily throwing away a lot of its forex firepower. Today our reserves position is much stronger at what, 360 billion odd. While it's a big screaming headline for sure for the media, all-time low, should one really be worried? I mean, there's going to be an argument that's always made that it's good for exporters. But overall, if you're looking at the Indian macros right now, how worried should we be, if at all, looking at these record levels for the currency?
No, I don't think we should be worried. Like if you look at Indian macro in all front, right, particularly your currency reserves, your current account deficit, in all that front, we are pretty stronger than what we were in 2013. And amongst emerging market, we are pretty strong in that situation. But when a big storm comes, which is like, that is dollar strengthening, you can't really escape that. So maybe one can think, okay, do you want to, put your ammunition now, or maybe, because if the thought is like if it goes to 10-year goes to, US 10-year goes to say 275, 3%, who knows, right? If that kind of situation happens, there will be blow. Of course, it won't be as bad as what happened in 2013 for all emerging market, because 2013 was more sudden. If you look at it now, this time round, people have been preparing for that higher move. And it could actually surprise you on the lower side also, like February onwards, when you see that new government is not going to spend that much, your yields, instead of going to 3%, may come lower, right? So that only clarity we'll get only in February. And if that happens, all emerging market will appreciate, and India will appreciate much faster.
Okay. A final question. Net, have the foreigners bought in the demonetization, or are they upset by it? Are we facing a double whammy with Trump and demonetization?
No, I think I can talk about the FPI in that. A lot of them actually sold out was more of, emerging market exit and moving to the dollar strengthening story. On the equity side, there is a mixed reaction. That's what I keep on hearing. It's also a little bit about slowdown in demonetization, but also dollar strengthening. So both together.
Fair point. Jayesh, thank you very much for joining us with your thoughts today. Well, when a storm comes, as Jayesh says, everyone will blow, but we could be the relative outperformers.